Let's continue this conversation on oil, especially as OPEC is in a deadlock, as Jared was just mentioning right now on the future limits on production. We are joined now by Rich Pontillo. He's a Nasdaq Senior Energy Analyst. Rich, great to have you back here with us. So let's just start here. Is there a possibility that the oil cartel is not going to reach any sort of consensus? And what happens in that instance?
Yeah, thanks for having me. I think the expectation right now is that there will likely be some sort of an agreement. Whether they do arrive at that kind of consensus estimate of about 400,000 additional barrels. The market, I think, right now is just taking a little bit of a pause today, obviously down about 2-3%. I think a part of that is just where we currently sit on oil prices, right? As Jared and others have mentioned, sitting at about 6-year highs. We're coming in from a long holiday weekend. We're still in kind of the peak driving season. The expectations are for gasoline prices, oil prices to continue to remain buoyed here. So even if there's a little bit of a short-term pause that's occurring right now due to the lack of kind of formal agreement that's crystallized within OPEC, I think there's still more room to the upside on oil prices.
All right, Rich. So let's talk about that move to the upside. I mean, what do you make of the volatile action we saw just today? Is a lot of this about the fundamentals, or is this really more, traders taking advantage of some profit taking here? And how much higher might you think crude will go? I mean, some people were talking about $100 crude again.
Yeah, no, I think today is just a pause. You look at kind of technical factors still continue to support more room to the upside. You look at analyst consensus price targets for their year end remain strong for oil prices, as due to some of the factors that I mentioned before, as well as some additional tailwinds with, again, kind of peak summer driving season. We're also just a couple weeks out from the quarterly earnings period, and I think a lot of market participants are going to be closely watching what U.S. producers, what the major oil field service companies are going to be indicating in terms of, what they're seeing from the customer base, from operators, whether or not they're going to be discussing possibilities of ramping production in light of economic activity, right? Obviously, we're continuing to rebound from COVID-related pandemic. As long as the economic activity continues to improve, remain robust within the U.S. and overseas, there's going to be a very, very delicate balance between U.S. operators and, of course, potentially OPEC ramping production in the event that we fall further into a supply deficit.
So, Rich, I know that we've seen, demand for oil really ramping up to some of these pre-pandemic levels. I'm curious to know, however, if you see that continuing, especially as we see this Delta variant right now, essentially taking dominance as the dominant strain here in the United States. It's already sweeping across Europe, and we were chatting with the doctor a little bit earlier about how the vaccines aren't as effective against this variant. He said flat out that we should not be doing global travel at this point in time. Do you think that these demand levels will continue in face of these variants essentially starting to surge?
I think so. I think if you look at activity here within the U.S., the average consumer is still very eager to go out, to spend, to drive, to get on airplanes, unless I think you really do see some sort of government mandated restrictions similar to what we experienced at the onset of the pandemic last year. Unless something like that is actually formally put into place, I still suspect that the economic activity that we've seen between U.S. individuals going out on the road, traveling, getting on airplanes, I foresee that continuing into, of course, the fall and potentially winter. It could be a little bit of a wild card, of course. But as of now, over the next couple months, it appears as though the economic activity, or at least the demand for crude and other energy products, should remain robust.
All right. Rich Pontillo, Nasdaq Senior Energy Analyst, thanks so much for joining us.